Hi, how's everyone doing? Now, if you are super busy, perhaps you are engaged in a 9 to 5 job and you don't actually have the time to sit in front of your computer screen to watch lower time frame entries or confirmations, and you actually want to engage with the market to make extra income for yourself, then this video is for you. You need to stick to the end of this video so that you can understand, because I'm going to show you how to take a set and forget entry in the market. You don't actually need to sit in front of your computer screen before you can actually make some good money from the market. Now, the major reason why a lot of us traders are engaged with the market is for time freedom. So it makes no sense if you sit in front of your computer screen all day. All right, it doesn't make any sense. So if you want to be taking set and forget, you just take a trade and then go do some other things for yourself for that day, then you need to stick with this video to the end. Now, in trading this strategy, there are some few things that you need to understand, and I'm going to give you some rules. Now, the number one thing is this: you must understand your time frame alignment. All right, in this strategy, we are actually going to be using only one time frame. Now, the second time frame I'm going to give to you is simply for refinement purpose. If you are using the 4H as your higher time frame, then you can use the 15M as your lower time frame. Like I said, that lower time frame is just to be used for refinement purpose. Simple. Now, if you are using the daily time frame, then you need to make use of the 1H as your lower time frame. Now, the same thing goes for the 15M, and the 1M will be your lower time frame. But I will strongly advise you that you stick to either the daily time frame and the 1H as your lower time frame, or the 4H as your higher time frame and the 15M as your lower time frame. The reason why I'm saying you should stick to these two time frame alignment is because the higher the time frame, the more highly probable that the trade will go in your favor. So please take note of that. That's the first thing you need to understand. Now, let me give you the rules here. Number one rule is that you need to identify your market bias on the higher time frame. Okay? For instance, in this case, I am using the 4H as my higher time frame. So I will need to identify the market bias on this 4H. When I mean market bias, I'm talking about whether the market is bullish or bearish. You need to identify that. Okay? That's the first rule. Now, number two rule is that do not trade a counter trend market using this strategy. Do not trade a counter trend market using this strategy. Number three rule is that you must understand basic inducement shift, because we are going to be using inducement here, just the normal inducement here. But the only difference is that you need to understand your inducement shift. Now, the number four rule is that you need to identify your area of interest on the higher time frame. Number five, refine higher time frame area of interest on the lower time frame. Remember, I told you we are using only one time frame, but the lower time frame is just for refinement purpose. Okay? And then lastly, you need to take the trade without hesitation. Once the 5 rules have been completed, just pull the trigger without hesitation. Now, let me show you one after another. Now, I said rule number 1 is identify market bias on the higher time frame. I've told you I'm using the 4H in this instance. So look at this. Price is pushing up, and then you know that a high or low cannot be valid, all right, until inducement is taken out. And here is your inducement in the market ticking. Once that inducement is taken, then your high or low is confirmed. In this case, this your high is confirmed. That is the first rule. Identify market bias on the higher time frame. So with this break of structure here, and price closes above means we are bullish. That's what you want to identify. That's number one rule. Number two, do not trade a counter trend market. As you can see, we are not in a counter trend. This is a bullish structure. This is the predominant trend, which is bullish. Number three rule says understand basic inducement shift. I'm going to show you that when we get to the live chart. And number four rule says identify area of interest on the higher time frame. Now, immediately after price has taken out inducement, what are you looking for? You want to mark out your area of interest on the higher time frame, in this instance on this 4H. So I mark out my area of interest. Then number five, refine higher time frame area of interest on the lower time frame. As soon as you mark out your higher time frame area of interest, go down to the lower time frame. In this case, my lower time frame is the 15M. So I will have to go down to the lower time frame, that's the 15M, and right there inside the 15M, you may find 2-3 areas of interest within this very zone, this very higher time frame area of interest. Sometimes you can have only one, and if you have only one, then you just mark it out. That could be the one you have. But if you have like 2 or 3 areas of interest within the higher time frame area of interest, then I will advise you that you pay attention to the extreme area of interest, especially if it has taken liquidity. This is very important. Why is it important? It is important because in set and forget strategy, you don't need any lower time frame confirmation, and therefore you need to be sure that the areas of interest that you have marked are high probability areas of interest. Simple. And in doing so, you need to follow strictly these rules that I have told you. Okay? So I will take you to the live chart now and show you a few examples. Okay, so look at this chart. Now, remember the first rule is identify market bias on the higher time frame. Take a look at this. We are pretty much bullish, as you can see. And this is the H4 time frame. Here is a high. And you need to understand why that is a valid high. It's a valid high because it took out inducement here. Now, after that inducement has been taken out, this high is confirmed. And then we have a new high. For this high to be confirmed, it needs inducement. Inducement was not taken. Now, this high took out this previous high, yet inducement was not taken. This high now eventually took out this inducement. Now, it took out that inducement, but again, look at the way it took it out. Now, remember rule number 3. Take a look at rule number 3 here. Understand basic inducement shift. I've told you that I'm going to show you that one. I'm going to give you a basic knowledge of inducement shift here. But here, this one, inducement shift, we treated it deeply in our VIP community. That inducement shift, that is what we want to see now. Look, it took out this inducement with a candle wick, not with a candle closure. Because it took it out with a candle wick, you cannot actually go ahead and mark this low as a higher low and this high as a higher high. Okay? Why? Because in future, price is likely to come and take out this very low here and use it as liquidity. So we cannot mark that. So we can now shift our inducement from this point to the next point. And so where is the next point? This is our new inducement now. All right? But take a look at it again. Look at what has happened there. It took it out with a candle wick. We cannot use this low as our higher low and this high as our higher high. No. Why? Because candle did not close below this inducement. Simple. So our inducement will be transferred. And where is the next one now? Inducement can be transferred from here to this point. All right? And again, it took it out with a candle wick. So this inducement will still be transferred. And therefore, price printed this high. For this high to be confirmed as a valid high, inducement is needed. And therefore, this inducement can be transferred from here to this point. That's your new inducement to confirm this high. Now, remember, all of these lows here will become liquidity for the market. All of them. will become liquidity. This low will be liquidity. This low will be liquidity. Okay, I want you to understand this very, very well because it's crucial. This low will be taken out. It's liquidity for the market. This one is liquidity for the market. We need to understand that. So all these lows will be taken out. All right? They will be taken out. Now, these lows are known as low resistance liquidity. So price will come and take them out. Most likely, it will take them out. So after marking your inducement here to confirm this high, where are your areas of interest? Only two areas of interest work within your trading range, and that is decisional area of interest and extreme area of interest. Now, take a look at this. Where is your decisional area of interest? Well, take a look at what is happening here. This is your order flow here. From this high to this low is your order flow. So this is your order flow here. So you stretch it out and wait for price to come and tap into it. That's your decisional area of interest. That's decisional. And where is the extreme area of interest here? This is our low. That's our low. And where is our high? Look, this is our high. That's our high. And that's our low. So now you have gotten your decisional area of interest. Where is your extreme area of interest? Let's determine the extreme area of interest. Now here, everything is mitigated, as you can see. Everything is mitigated. Now, the only area of interest that you can see that is not mitigated is this. This is your order flow here. Clean order flow. So that's your extreme area of interest. Simple. Simple. So in future, if price comes to this, then we'll be more than happy to take trade from there. So that's your extreme area of interest. This is your decisional, and then the extreme. Remember, all this happened on the H4. Now, let's drop down to 15M in order for me to refine this very order flow. I mean, this very area of interest. So this is our decisional area of interest that we need to refine here. Okay? We need to refine this decisional area of interest first of all. Now take a look at this. What's happening here? Just take a look at what is happening here. Now, this is your refinement here, because if you look at this H4 zone, everything has been mitigated. This order flow here is mitigated. Everything is mitigated, as you can see, except this one. Except this. Look at this. That's your refinement on the 15M. That's all you need the 15M for, just to refine. That's all. After refinement, place your trade. So we have refined the order flow from this large, we have refined our area of interest from this large H4 order flow to this 15M order flow. So we can actually enter our buy position there, right here. We want to enter our buy position there. Just give a little bit of buffer, okay? And then our stop loss just below. Give a buffer, and our take profit this high. So we are targeting this high. Okay? Simple. So our TP just right there on that high. Look at how massive it is. If price goes our way, then that will become massive. That's all. You don't need to do any other thing. Set and forget. Just put your pending order here and go do some other things for yourself for that day. All right? Now let's advance price. Let's get to the H4 so that it can be faster for us. Let's just go to the H4. Okay? And continue to advance price. Can you see what is happening there? price came straight into this refined order flow here. Can you see that? Let me show that to you clearly. Price came precisely to that refinement OB or area of interest. Can you see that? It tapped into it. But let's see whether price will go our way. Price is now pushing upward in our favor. So you can see price going directly in our favor, creating higher highs, and boom. Can you see that? It smashed our take profit and it's still going higher. So that is the beauty of set and forget. You just set it and forget about it. All right? All you need to do is to come back at the end of the day to come and take your profit. That's all. That's all. You don't need to sit in front of your computer and begin to watch every move of the market on the lower time frame. All you need to do is to follow the rules. Make sure you follow the rules. Okay? And then you will see the wonders of set and forget trading strategy. Now let me show you one more example. Okay, so this is another example. Now, first of all, on our rule, we said determine the market bias on the higher time frame. We are right now on H4 and we want to determine the market bias. As you can see, we are converted from this bearish structure to bullish structure. I hope you understand that. So this is our bullish structure now. All right? Now, but after determining the bullish structure, now price has printed this high. And for this high to be confirmed, it needs inducement. So the inducement here is right here, this one. This is your small inducement. So it took out that inducement to confirm this high. All right, so this becomes our new major structure high in the market. That's our high. And where is our low here? We need to determine the low. Where is our low here? Look at this. This is a high. Why is that a valid high? It's a valid high because it took out this inducement here. So now this is our low in the market, this one. This is our higher low in the market before this higher high. Can you see that? Remember, when price broke structure here to confirm this low here. And now, inducement has been taken. Where are your areas of interest? Remember, there are only two areas of interest that work within your trading range. So where are your areas of interest? Okay. Number one area of interest is this one. Okay, this is your number one area of interest. And as you can see, that area of interest did not hold, because I'm not going to sit down here and show you only winning trades. I want to show you that in this market, whatever strategy you are using, you will incur some losses. But one good thing about trading the smart money concept is that your wins will cover up for your losses. I want you to understand that. So right there, as you can see, price blew through this area of interest. This is our decisional area of interest, and it did not hold price. Okay? Now, we have the extreme area of interest right here. That's our extreme area of interest. Okay? And so we stretch that out. When price comes into that, that's on the 4H. Now, one more thing you need to do is to go to the 15M and refine this area of interest, because this is too large. Okay? So we just want to go to 15M and refine it. Okay, so this is the 15M. let's refine this extreme area of interest here. Remember, you have taken a loss here. So this is your extreme area of interest here. Everything is mitigated, as you can see. Everything is just mitigated there. So this is the only area of interest that is available here. Okay, that's your area of interest as your refined area of interest. So you will place your trade here. This is where you're going to place your trade, and therefore, because we are buying, so we place our trade somewhere here, just below here, just here, and your stop loss will be below. Okay, let your stop loss be here. And then where is your take profit here? Your take profit will be this high. Let's see, the high will be this high. I think so. Let me zoom out to see where is the high. Okay, so it will be that high. So where is your take profit will be here, which is a good trade. All right, if price goes our way, then it will be a very good trade. Let's see what happens. Now let's get to the H4 so that it can be faster. Okay, so let's play price here and see what's going to happen. Okay, so price has come into that area of interest, as you can see, that refined area of interest, and it's now going higher. Let's see whether it will go our way. So price came back into that area of interest. Some people will be afraid and they will close their trade from here. You don't need to when you know what you are doing. That's why to stare on your screen is not the very best. All right? Set and forget. Okay. So as you can see, our area of interest has been smashed. Okay? And price even went higher. So that is the way for you to trade your set and forget trading strategy. Very powerful. It is for those who do not have the time to sit on their screen to have lower time frame confirmation entries or setups. Okay, so you can use this to really make a huge money for yourself on the sideline if you are pretty much busy. All right, guys, but if you are new to our channel, please consider subscribing and give us a thumbs up. All right, please like this video so that the YouTube algorithm will be able to show it to more traders like you who want to have this kind of knowledge. Please give us a like, and if you have any questions, leave it in the comment section. I will do justice to it. If you are yet to join our free Telegram channel, please do so just immediately. Okay, because right there we also post some high probability trade setups. Okay, it is completely free, and if you want to know how to trade more, if you want to have more knowledge about this type of trading strategy, then you can decide to avail yourself of the opportunity of joining our VIP community. All right, join our VIP community, then you will learn more of this type of trading strategy. All right, guys, I see you in our next video. Thank you for watching.